Good afternoon.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks gained on Friday as investors breathe a relative sigh of relief over an inflation report that came in line with expectations. Wall Street also digested new data signaling souring consumer sentiment and Trump's fresh round of punishing tariffs. And as a result, things were largely green today. Couple of red here and there. Costco down on the back of its earnings, 2.9% in light of the consumer defensive sector, fairly resilient. Oracle down another 2.7% along with Palantir. In the infrastructure space, Apple was down 0.55%, but it was one of the best performing mega caps this week on the back of optimism on the iPhone 17. ABGO for semis was down. Meta was down here in communication services. And other than that, it was fairly green through and through. In fact, every single sector gained here on Friday, with the S&P 500 up 0.57%, but every single sector in the green. Small caps participating too. The Russell 2000 up 1%. And have a look at this, guys. There was 1, 2, 3, 4, nearly 5 sectors up more than 1% today. And it was a broad-based rally in mid-caps and small caps. In fact, outperformance here in the mid-cap and small cap space. But through and through, we just saw positive market momentum on the back of inline inflation data. Now, the data was actually really good because when you look at the core PCE price index, the month-over-month figure came in at 0.2. The consensus was for 0.2. And then when you look at the full year figure, it was 2.7% versus 2.7%. So really good data. But what was really encouraging was actually the personal income outlays. When you look at personal income and personal spending on a month-over-month basis, those figures came in at 0.4 and 0.6 versus the consensus of 0.3 and 0.5. So consumers are making more money, spending more money, right? And inflation actually came in line. Normally when you see a beat in these numbers right here, inflation actually ticks up. And this is telling us that some of the underlying inflation metrics, maybe like shelter, are actually continuing to cool, because when we got all that expected income and spending and inflation comes in line, that's very positive for the market. Michigan consumer sentiment missed. However, this is the highly politicized survey in my opinion. And the data continues to look good, but it wasn't all good news. Trump came out saying he's looking to impose a 100% tariff on branded pharmaceutical drugs. The rate will apply to any pharmaceutical company that isn't already building a manufacturing plant in the US. The president said in a social media post late on Thursday, but offered no further details. Furthermore, imports of heavy trucks and certain categories of furniture will also face heftier tariffs. Trump said the new duties will come into effect on October 1st, and it does look like right now the market is just brushing through any type of tariff news, brushing it over. It's not really materially going to impact, especially with how companies are able to get around these tariffs. Furthermore, the markets are also already grappling with concerns about a US government shutdown as the Democrats and Republicans try to get a budget bill through Congress. This is going to lead to a lot of uncertainty as we approach that deadline. And then we also got this on Truth Social. Donald Trump posting a picture of him firing Jerome Powell. So guys, one thing I can say is come Monday, expect madness. And then looking at some market movers, Electronic Arts, ticker symbol EA, surged 14.5% on Friday after the Wall Street Journal reported the electronic gamer maker is nearing a deal to go private. Shares jumped 15% in afternoon trading according to the report. The deal, valued at $50 billion, would be the largest leveraged buyout of all time. Private equity firm Silver Lake and Saudi Arabia's public investment fund are some of the investors involved in the agreement, which could be disclosed as early as next week. Boeing stock glided 3.2% higher in midday trading on Friday after the Wall Street Journal reported that the Federal Aviation Administration, the FAA, will allow the company to once again perform its own final safety checks on 737 MAX jets starting next week. The company also clinched 2 large deals with Turkish Airlines and Norwegian Air Shuttle, boosting the stock. Turkish Airlines placed an order for 75 787 Dreamliners, while Norwegian Air ordered 30 of the aircraft. Restoration hardware dropped 3% on Friday as the market was pricing in and weighing the impact of Trump's new furniture tariffs. President Trump announced new 50% tariffs on kitchen cabinets, bathroom vanities, and associated products, and a 30% tariff on upholstered furniture beginning October 1st. And then Costco, after its earnings, was down 2.74% as the wholesalers' same-store sales figures did not impress Wall Street. Same-store sales increased 6.4% and was slightly higher than the expected 6.2% growth, though US same-store sales, which increased 6%, slightly underperformed the street's estimates. And then for everything we saw today, there was 4,000 advances, 2,200 decliners. We saw net inflows in the Nasdaq 100, outflows in the New York Stock Exchange, with the S&P 500 gaining 0.59% on the day. We've lost the 5-day, we've lost the 20-day when it comes to market momentum, but we did see tangible improvements from yesterday into Friday's trade, and then the 50, 100, 150, and 200-day continue to remain robust in this current market environment. Now, looking at the charts, you can see this is the S&P 500 over the last 5 days this past week. Pretty much flat, slightly down 0.14%. You can see a strong move off the lows here Thursday into Friday, making all-time highs here into Monday, but then seeing lower lows again into Thursday right here, and then us rallying. But not yet, not a massive change on the week, and somewhat of a mean reversion trade. You could say we got overbought here, oversold here. Net, we finished flat. But let's look at some of our other parameters. If we go ahead and look at the RTY, the Russell 2000, we'll add that right there, and then we'll also just add gold. Now, gold was very bullish this week, really just rallying on further potential rate cuts and just some geopolitical tension out of Russia into Europe. That is why we saw gold continue to just outperform. I think up 40% year to date. The Russell 2000 outperformed the S&P 500 ever so slightly, but both indices were pretty much just flat. Now, the worst performing this week was actually Ethereum. Ethereum was down 3.94% here after falling significantly here into Wednesday, into Thursday, sort of putting in a low, rallying about 4%. However, this is the type of volatility you will get in cryptocurrencies. And then if we actually just add a Bitcoin to the mix right here, you could see that Bitcoin was somewhere in between Ethereum and the S&P 500, down 3.22% here over the last 5 days. If we look at a year to date, we can see that gold is the best performer, but Ethereum in second place there, and then the S&P 500, Bitcoin, the Russell 2000, all roughly the same, with the RTY up about 8%. But guys, given everything we've had this year, the tariffs, Trump, everything, right? You're actually seeing these numbers is fantastic. And then gold up 41% for the year. Absolutely insane. And I do think all of these will go higher into the end of the year. But actually looking at Friday more specifically, you can see some very, very cool stuff. Equities were very, very strong across the board, led by mid caps, led by small caps, but the equal weighted participated as well. The Russell 2000 and even some of the mega caps, but we just saw complete outperformance here. I mean, look at the S&P 600 versus the Nasdaq 100 versus the S&P 500, almost a double in performance, and you could see a value outperforming growth. That's generally what we saw here today. Internationally, we saw European stocks gain, Middle Eastern stocks gain, Chinese stocks were down, and Indian stocks were down as well. Crypto, we'll talk about crypto because, this is actually the Sunday movement price action right here, but virtually flat for the weekend. After, Thursday, Friday, the price action wasn't too great. And then volatility on Friday ticked down for equities. We saw yields move lower on the back of what was both mixed economic data and also good economic data. The dollar fell, TLT was flat, and then gold and silver gained. And silver really, really rallying. If we actually look at the silver chart, we could see it's actually outperforming gold over the last, I would say, 3 or so months. But gold has outperformed silver this year, but silver really, really making a move, off these $26 lows right here. I think we did have a price target for silver around about the $40 area. If we actually just look at silver year to date on a percentage return, actually outperforming gold. Absolutely crazy to see that. One of the best performing metals so far this year. And I do think silver will continue to rally. I think metals as a whole will continue. I think metals as a whole and what we consider store of value assets will continue to rally. Now, let's actually go ahead, look at the S&P 500. Let's look at the weekly chart. Let's actually just hop on the SPY really, really quickly. Looking at the weekly chart, zooming in, we continue to just see what is higher highs, higher lows into weekly all-time highs, as you can see right here. Now, we didn't actually close, but we did notch an intra-week high early on in the week on Tuesday. Very, very bullish chart right here. But this is a very, very ominous candle. That is what we call a neutral doji, right? So what's at the bottom and top, very indecisive price action, black for the week. And ultimately, what normally precedes dojis is neutral to slightly down price action. Now, it's not always the case. You can see right here what happened. We just continue to move higher with this doji. But in other instances, when we do print a doji, it can actually lead us to sell off relatively quickly. Now, I do think we are due for some pullback. Nothing crazy. I'm thinking a garden variety pullback of about the 5 to 10% variety. And that should take the S&P 500 anywhere between the 6,400 and the 6,300 area, somewhere around there. And I'm not saying we're going to get it next week or next month. I'm just saying, be prepared for that, but ultimately just a dip buying opportunity because we have rate cuts, earnings, AI is real. Monetary policy is going to be very front loaded. Liquidity is coming back into the market. You definitely want to buy any dips we do get. Now, while the weekly chart looks great, when we hop onto the daily chart, if I just zoom out right here, you can see the daily chart looks good when you zoom out, but when you zoom in, there's a couple of concerning stuff. Number one, you can definitely see we are in a daily downtrend. Now, Friday's price action was very, very constructive, don't get me wrong. And we actually did put in a higher low here on the daily chart relative to this low we got right there. However, what we do need to see is follow through from the bulls. And we also do have the core wall, which could produce a little bit of resistance. Now, we do know that we do have quite a number of Trump's tariffs coming to par, furniture tariffs, heavy vehicle duty tariffs. That can wobble the market in certain areas, but if it doesn't impact tech, I think ultimately we should just consolidate. That being said, guys, even if we do pull back to the 4,900 area or the 6,300 area, it's just a dip buying opportunity. And I would actually welcome, guys, having some sell-offs in the market, having a pullback is completely healthy. And it's actually what you want because it allows us to form a foundation here at the lows. We get to put in a solid floor and it allows us to simply move higher and reach new highs into 2026. Now, looking at the Nasdaq 100, very similar to the S&P 500. When we look at the Russell 2000, again, I think everything just looks very, very constructive. If we do have pullbacks, they're just dip buying opportunities. And that is the same for stuff like the RSP, the equal weighted S&P 500, and even midcaps. All of these indices look really, really good. And in recent weeks have made all-time highs. That is absolutely not bearish. All-time highs. It's very, very bullish. Now, looking at Bitcoin, we continue to hold this 109 area. I've said for a while now that the bulls need to hold this 109 area right here. It looked like that is the case, but if we do get like a sell-off early on in the week, right, that could be really, really ugly, and we can retest the 100,000 mark very, very quickly. So bulls need to step up right here for Bitcoin, otherwise things will get ugly. Very much the same for Ethereum. We are at the 4,000 level. We did hold it right here, but if we continue to move lower, right, if we don't actually start having bullish price momentum to the upside, we start breaking lower, I mean, we can really target some very, very ugly low levels here for Ethereum, even in the low 3,000. So bulls, it's now or never in the crypto space. Ethereum is looking good right here. It's not looking that great at the moment. Nonetheless, I am still incredibly bullish, looking out 6 to 12 months here for crypto for the most part. But looking ahead for the week, I think the market is going to do one thing, and that's trade very trepidly into the non-farms numbers, and it's going to assess a lot of the labor market data that we get as the week goes on. Earnings season is coming to a close, and we're also going to look at a lot of the names in the AI trade. These names have rallied a lot, and I think the AI trade names are going to look like what Cypher Mining is going to look like. You can see right here that Cypher Mining has had an incredible year-to-date journey. It's had ups, it's had downs, but if we actually just go on a percentage return basis, it's up 96%. But you can see here at the highs, right, it was up 160%. And if we actually just zoom in, and then we just take a measured move, it peaked at the $15 mark. It's now at the $11 mark. It's down 29%. So I'm expecting all of these AI infrastructure names to sort of pull back. They're probably going to lead, right? And once they start to form a base, wherever that may be, once they start to form a base and had their pullback, you'll see the rest of the market pullback. Then you'll see Nvidia pullback, and then that will ultimately mark the bottom. I think these AI infrastructure names are leading market momentum to the upside and the downside, and we should see a bit of a pullback right here. So Cypher Mining is one of them. Iron is another one. Iris Energy. You can see it's also pulled back from its peak right here from $48 to the $41. Not as drastic as Cypher Mining, but it is down 9.57%. in a single day. Another one is EOSE. Again, these are relatively small companies for the most part. Again, if you just measure peak to trough basis, from the peak to the trough, that's down like 13%. To where it closed, it's down about 10%, so nothing crazy. But I do think we are going to see all of these names pull back. And again, they're going to lead to the downside. And once they form a base, that's when we know the market's going to turn. And I think this is going to happen relatively quickly. So these are the names I'd be looking at if you're looking to get into the AI infrastructure names or the AI infrastructure space. EOS Energy, ticker symbol EOSE, Cypher, CIFR, and Iron, IREN. And then if you are looking for the heavy hitters in the space, NBIS is one of those names, but a lot of momentum because they just signed a deal here with some hyperscalers. And another one would actually be CoreWeave. So these are the pure play data center names. You can see CoreWeave's chart not looking that great, and that's because it front loaded a lot of the move very, very early on. You can see we have some local lows here at the $90 mark, but this price action is not constructive because we got a high, lower high, and now a lower high. Ultimately, we really needed to go ahead and take that high right here at the 150 mark. The market could not do it, and now we are seeing some price action. So what we need to do now for CoreWeave is actually hold these lows right here. If that is the case, let's say we hold these lows, then we can target these highs right here, these highs right here, and then ultimately the all-time highs for CoreWeave. But CoreWeave not looking constructive, but I think this space is still primed, and all CoreWeave is doing is just digesting this massive 400% move it had after its IPO. Remember, the IPO was priced at $30 a share. It got to as high as 187. Absolutely monster move. So I think this whole infrastructure data center space is going to do very, very well. Another name I do like in the space is NVIDIA. Not super expensive, but you can see we are having somewhat of a correction in time right here. And ultimately, I think if we do pull back, you're going to find strong support at the 153 area here for NVIDIA. Why do I say that? Because if you zoom out, it was previously where we made these highs right here in late 2024. So 153, let's just call it the solid 150 area. That's going to be the support zone if NVIDIA continues to pull back. You can see we've based out, forming an island top. I do think we should see NVIDIA pull back and then ultimately form a base right here and then move higher into 2026. And let's talk about sentiment, guys. This is BOFA's bull bear indicator, and we are at the 6.2 level right here, which is telling us that things aren't exactly bullish, things aren't exactly bearish. We're sort of in the neutral zone, closer towards this like greed zone where we would actually sell. Again, this is extreme bullish, and we're not quite there yet. We're at 6.2. We're roughly in this middle range. You can see a couple of these indicators are very bullish. Credit market technicals, equity market breadth, as well as bond flows are very bullish. Equity flows are neutral. Long only positioning is neutral. And then we have high frequency positioning, right? This is actually very, very bearish. So there is still room for us to run. If we see equity flows, long only positioning and high frequency positioning turn, we could actually see this push further to the greed zone. And Tom Lee believes that is what will happen. He believes the S&P 500 is not super overbought, and it's helpful to look at the S&P 500 compared to its 200 daily moving average. And this is exactly what's happening right here. The current number is at about 10%, which is not where you typically see local tops. Generally, local tops are seen near the 13, 14, or 15% range. And if we model this out, the implied move is for 6,900 into year end. And that is what Fundstrat is predicting. My year-end target is 6,600. Tom Lee a little bit more bullish than me, but this analysis does make sense. And the truth of the matter is earnings have reached a new high everywhere. The Dow forward earnings, the Nasdaq 100 forward earnings, as well as the S&P 500 forward earnings. And stocks continue to march higher. And this chart might be the simplest explanation for US market resilience right now and why it's been like that for pretty much most of this century. This is something I've actually heard senior leaders at some of the largest asset managers point out in the past. The idea that equities can continue to rise, partially due to less supply. Couple this with the proliferation of ETFs, it's hard to see where this ends. Long story short, there's just less stocks to buy, and when there's not enough supply, demand makes up the difference, and demand makes its way in price. Vis-a-vis, stocks continue to move higher if we continue to remain undersupplied in the equity markets. And that looks like it is the case. Now, diving into the macro, guys, the Fed's GDP now for Q3 surged to 3.9%. For those of you looking for a recession, it's not coming. And it's hard to be bearish when you have macro like this. This is the economic surprise index at the highs we saw earlier on the year in 2025. And then right before this is some of the best best economic data we've had going back to 2024, guys. One thing is certain, the macro is good. Economic data is surprising to the upside. That is a recipe for equities to continue to move higher. Looking at earnings, we don't have much. We have Carnival Corporation here on Monday, Paychecks before the open on Tuesday, along with Nike. That's pretty much it. A couple of IPOs, nothing on Thursday or Friday. We are nearing the end of Q2 earnings season. And then week after next, we will be into Q3 earnings season with the big banks reporting. Looking at some high impact data next week, it's all about the labor market. JOLTS data, the consensus there is for 7.1 million. That is happening on Tuesday. Wednesday, you have ISM manufacturing. The number we're looking for there is 49.2. In fact, if we get a number above 50, that might be a really, really good thing. Then Friday, the big one is in non-farm payrolls. We're looking for a 39,000 consensus, a very low bar. Forecast here is for 50,000 according to Trading Economics, and then the unemployment rate of 4.3%. We'll see if this is the case. And then we also get the ISM services PMI looking for a 52 figure right there, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.